$813 billion in 3 months. I actually need to lie down.
Don't go soft on me just because the deal values look like phone numbers.
Devon and Coterra are doing a $58 billion all-stock dance. It's a banker's paradise right now.
It's a desperation play, Nate. Organic growth is dead. They're just buying scale.
Well, Estee Lauder is circling Puig, so clearly everyone wants to look pretty for the market.
Hold the perfume gossip. I want to see the math on this energy megamerger first. The rundown. $1.8 billion for a stablecoin startup in this regulatory environment. I had to read the Mastercard press release 3 times to make sure it wasn't a typo.
You're looking at this like a compliance officer. Look at it like a plumber. Mastercard is buying pipes. BVNK is infrastructure for the next 10 years.
They're buying a massive headache is what they're buying. You really think the financial watchdogs are going to just wave this through?
Yeah, because it's Mastercard. They know exactly how to play the regulatory game. They probably had lobbyists in DC briefing staffers before the ink was even dry.
I'll take the under on that closing smoothly. Regulators are going to scrutinize every inch of that stablecoin footprint.
Fine, we can track the filings. But speaking of massive financial plumbing, Corebridge Financial merging with Equitable Holdings, $22 billion.
Now that makes sense to me. It's pure scale. Organic growth in financial services is basically impossible right now. You either buy a competitor or you slowly bleed market share.
Spoken like a true pragmatist, it fits perfectly into this historic first quarter we just had. $813 billion in total deal value. Everyone is just buying revenue.
Including Thermo Fisher. They finally closed on Clario, bought it out from that PE consortium for $8.875 billion.
I love that you include the 7.5.
The footnotes matter, Nate. $75 million is real money.
Not to Gilead Sciences. They just dropped $2.2 billion on Uro Medicines just to get their hands on a T-cell engager program. But Maya, you're skipping the most important transaction of the week.
Don't tell me it's the egg membrane deal.
It's absolutely the egg membrane deal. Alios Capital taking a majority stake in Eggnovo to scale functional egg membrane ingredients globally. Tell me that doesn't sound like a fake company from a sci-fi movie.
I actually looked at their patents. It's a brilliant play on sustainable biomaterials. You just hear the word egg and think of breakfast.
I'm just a simple former banker. I see a weird food science deal. I laugh.
Well, save your laughs for the consumer space, because the whisper numbers I'm seeing on this potential Estee Lauder and Puig tie-up are wild.
Oh, I've heard those whispers too. A global beauty monopoly in the making. We're going to tear apart those rumors, plus that billion-dollar Sony and TCL chatter right after this quick break. The big one. $813.3 billion. I just need to say that out loud. $813 billion in a single quarter.
Up 50% from last year, and honestly, it feels like half of that volume hit the wire in the last 10 days. The M&A bankers are definitely upgrading their Nantucket rentals this summer.
Oh, my old managing director is probably pricing out a second yacht as we speak. The scale of this quarter is just absurd. We are looking at a historic surge, and it is entirely driven by these behemoths realizing organic growth is basically dead.
Right, which brings us to the elephant in the Permian Basin, Devon Energy and Coterra Energy, a $58 billion combined enterprise value.
This is a masterpiece of a consolidation play. Devon gets Coterra's premium acreage. They lock down massive operational synergies, and they create a heavyweight that can actually dictate market terms. It is the absolute perfect marriage.
Perfect marriage? Nate, it is an all-stock merger. They are just swapping paper. Whenever I see a massive all-stock deal in the energy sector, my immediate thought is that neither side wants to part with hard cash because they secretly know the commodity cycle is peaking.
You are being entirely too cynical.
It is literally my job to be cynical. Look at the footprint. They are hyping up these operational synergies, but integrating 2 massive sprawling drilling operations is a logistical nightmare. I read through the merger presentation this morning. They used the phrase value-enhancing operational overlap 4 times on one single slide.
Okay, that is just classic pitch deck poetry. You have to admit, combining those assets gives them the scale to survive whatever happens with pricing next year.
Surviving is not the same as creating value. I am just saying a $58 billion enterprise value built entirely on a stock swap feels a bit like two drunk guys leaning on each other to stay upright.
Okay, wow, that is a little harsh. They are both printing cash right now. But I take your point on the equity structure. Energy is not the only sector playing the mega deal game, though. We finally got the official close on Abbott Laboratories swallowing Exact Sciences.
$23 billion for that one, and that was actual cash, which I respect significantly more.
Abbott is not messing around. They looked at the healthcare consolidation trend, looked at the diagnostics landscape, and just bought the biggest piece on the board.
The premium was steep. Exact Sciences has great tech, obviously, but $23 billion is a massive bet on cancer screening margins holding up long term.
When organic growth gets this hard, you buy the revenue. It is the defining theme of 2026 so far. Everyone is pairing up.
Which is exactly why I want to talk about the regulators next. Because you cannot just smash giant companies together anymore without someone in Washington throwing a fit, especially when you start mixing legacy payments and crypto.
Oh, you mean Mastercard dropping $1.8 billion on a stablecoin startup?
Exactly. Let us see if the financial watchdogs actually let that one happen. Voices.
So the analysts are finally saying the quiet part out loud about this $813 billion quarter.
You mean the consensus that organic growth is basically dead?
Exactly. They're calling it a strategic focus on scale, but translate that from analyst speak. It means nobody knows how to build anything new anymore, so they just buy their competitors.
See, I completely disagree with that read.
Oh, come on. Look at Devon and Coterra. $58 billion. That's a pure scale play. They just want a bigger straw to drink the milkshake.
Energy is always a scale play, Nate. But look at the healthcare numbers. Abbott dropping $23 billion for Exact Sciences. Gilead paying $2.2 billion for Uro medicines. That isn't just buying revenue. They're buying specific T-cell pipelines and diagnostics because the science is moving faster than internal R&D can keep up.
Fair. But the industry watchers are also tying this whole surge to interest rate stability and the urgent need for AI infrastructure. They're acting like every deal is a noble quest for the future.
Which is hilarious when you look at the gossip wire. I'm pretty sure Estee Lauder sniffing around Puig to create a global beauty giant has exactly zero to do with artificial intelligence.
Unless they're developing an algorithmic perfume.
Please don't give the bankers any ideas. AI-optimized mascara is probably already a pitch deck somewhere.
I'd absolutely take that company public. But seriously, the Estee Lauder rumors are wild. It's classic empire building. Just like Sony supposedly nearing a $1 billion home entertainment deal with TCL.
It's all about capturing the living room.
Right, and you know who else is trying to capture a very different kind of room? Mastercard.
Ah yes, dropping up to $1.8 billion on BVNK.
Trying to buy their way into the crypto casino. But the financial watchdogs are definitely going to have thoughts about that one.
And they aren't the only ones waking up to regulatory scrutiny tomorrow morning. Spill the tea.
I'm telling you, the luxury beauty space is losing its collective mind right now over this Estee Lauder rumor.
You really believe they're going after Puig?
Absolutely. Think about the empire building. Estee Lauder swallowing a Spanish fragrance house like Puig creates an absolute global monster. It's a classic scale play. Organic growth is dead, so you just buy your coolest competitor.
I don't buy it.
Oh, come on.
No, seriously. Estee Lauder has spent the last 2 years trying to fix their supply chain and turn around their China business. You think their board is going to sign off on a massive, complex integration of a family-controlled European fashion house right now?
Yes, because they have to. If they don't buy Puig, L'Oreal will. It's a defensive maneuver dressed up as a strategic expansion.
A defensive maneuver that will probably cost them a massive premium. I need to see the term sheet before I believe this is anything more than bankers floating a trial balloon.
Spoken like a true skeptic. Fine, what about the hardware whispers? Are you buying the Sony and TCL chatter?
Now that is actually interesting. $1 billion for a piece of TCL's home entertainment business.
Right, Sony, the king of premium hardware, dropping $1 billion on TCL. It feels completely backward. Usually the legacy premium brand gets bought by the volume player.
It's a pure distribution play. Sony wants that mid-tier market share, and TCL has the manufacturing scale. It's actually smart. Way more practical than a luxury perfume vanity project.
I'll take vanity projects over television manufacturing any day of the week. The advisory fees are higher and the closing dinners are definitely better.
We'll see if either of these actually hit the tape tomorrow.
We'll be watching for those official confirmations, plus keeping a very close eye on the regulatory wires. Mastercard's new $1.8 billion crypto acquisition is going to draw some immediate heat from financial watchdogs. Tomorrow's radar. I'm refreshing my terminal tomorrow morning purely for the Estee Lauder and Puig deal.
You really think they announce tomorrow?
The whispers are deafening, Maya. A global beauty monopoly is forming right under our noses. Pun absolutely intended.
Oh, please. You're getting distracted by expensive perfume. The actual action tomorrow is on the regulatory wires.
Don't tell me you're still tracking the Sony and TCL rumors. A $1 billion TV deal is practically a rounding error this quarter.
No, I'm watching Mastercard buying BVNK for $1.8 billion. And ICE taking that massive stake in OKX. Financial watchdogs are going to swarm those filings the second they hit Edgar.
You really think they block a stablecoin buyout? Mastercard needs the infrastructure. Organic growth in payments is brutal right now.
Have you met these regulators? Buying crypto right now is just begging for a subpoena.
Fair point. I guess we'll see who has a bigger headache tomorrow. The regulators trying to understand stablecoins or the bankers modeling Spanish fragrance synergies?
My money's always on the regulators. Read your footnotes, everyone.